Centene Corporation stands as a significant entity in the landscape of American healthcare, a major player with a broad reach. Yet despite its size and influence, it's not exactly a household name recognized by the average person. In reality, it's one of the largest health insurance companies operating in the United States, a true giant in the industry. Functioning as a crucial middleman, Centene bridges the gap between the government and the healthcare needs of millions of patients across the nation. Primarily, Centene manages comprehensive health plans specifically tailored for Medicaid recipients, ensuring access to vital medical services. They also administer plans for Medicare beneficiaries, catering to the healthcare requirements of senior citizens. And they are a key participant in the health insurance marketplace, established by the Affordable Care Act. These programs are designed to serve low-income families, provide essential care for seniors, and extend a healthcare safety net to underserved communities. The company's core mission is deeply rooted in the principle of providing affordable, high-quality healthcare services to those who need it most, regardless of their socioeconomic status. Centene's operational footprint spans across all 50 states, demonstrating its extensive reach and influence. This widespread presence makes it a critical and indispensable component of the nation's overall health safety net, ensuring access to care for vulnerable populations. Consequently, when states consider expanding their Medicaid programs or implementing adjustments to the Affordable Care Act, Centene invariably finds itself at the very center of those pivotal changes, actively involved in shaping the future of healthcare policy. So, how exactly does Centene's business model operate? Here's a simplified overview of the process. At its foundation, the government provides Centene with a predetermined, fixed payment for each member enrolled in their plans on a monthly basis. Subsequently, Centene utilizes these funds to cover the costs associated with providing medical care to its members. This includes everything from routine doctor visits and necessary hospital stays to the filling of prescriptions at the pharmacy. Therefore, if the members maintain good health and require minimal medical intervention, Centene stands to generate a profit. Conversely, if the members experience higher rates of illness than anticipated, the associated costs escalate, leading to a reduction in profits. This delicate balancing act between managing costs and ensuring quality care lies at the very core of Centene's business operations. With a vast network, the company currently serves over 27 million individuals across the United States. Consequently, its financial performance serves as a reflection of broader trends within the healthcare industry, as well as the impact of evolving government policies. Centene stock, which is publicly traded under the ticker symbol CNC, is closely monitored by investors and analysts alike, as it provides valuable insights into the overall stability of government-funded healthcare programs. The company's primary challenge revolves around a multifaceted approach, effectively managing healthcare costs, skillfully negotiating favorable rates with medical providers, and actively encouraging preventive care measures to ensure that its members remain as healthy as possible. Any funds remaining after all medical claims have been paid out are then recognized as profit. However, it's crucial to acknowledge that this profit margin is highly susceptible to fluctuations in enrollment numbers and the overall health status of its members. In recent times, this delicate equilibrium experienced a significant disruption, triggering a chain reaction that reverberated throughout the entire healthcare sector, causing widespread concern. Therefore, understanding Centene's pivotal role in the healthcare landscape is essential to comprehending why its recent challenges are of significant concern to millions of Americans, and why they hold profound implications for the future trajectory of the U.S. healthcare system as a whole. So let's delve deeper into the specifics and examine exactly what went wrong, uncovering the root causes of this disruption. Centene shocked Wall Street, sending ripples of concern throughout the financial community. The healthcare giant surprised many by withdrawing its financial forecast for 2025. This unexpected move immediately raised eyebrows and sparked questions about the company's future prospects. A forecast is a company's promise to investors, a carefully constructed projection of what lies ahead. It's a roadmap for future revenue and profit, a guide that helps investors understand the company's strategic direction and potential for growth. Pulling it signals deep uncertainty and shakes investor confidence, creating a sense of unease and prompting investors to reassess their positions. This wasn't a minor adjustment. It wasn't a simple tweaking of numbers. Centene scrapped its long-range earnings target entirely, a drastic measure that suggested a fundamental shift in the company's outlook. The company admitted that the business environment had changed so much, becoming increasingly unpredictable and challenging to navigate. Its old assumptions no longer applied, rendering previous projections obsolete and unreliable. This rare move for a company of Centene's size sent red flags across the market, signaling potential trouble ahead. The reason? What factors led to this dramatic decision? A perfect storm of negative trends hitting the core of its business, creating significant headwinds and undermining its financial stability. Management said they simply couldn't see far enough ahead to make reliable predictions, acknowledging the high degree of uncertainty surrounding their future performance. Investors prize predictability. They seek companies with stable and consistent growth prospects. So this admission was alarming, triggering immediate concerns about the company's long-term viability. The result? The immediate fallout was significant. Centene's stock price plunged, reflecting the market's sudden loss of confidence. Wiping out billions in market value in a single day, a stark reminder of the power of investor sentiment. The message was clear, the market had spoken. If Centene's leadership isn't confident about the future, why should investors be? The question hung heavy in the air. The withdrawal created a vacuum of information, leaving investors scrambling for answers. And in that void, the market assumed the worst, fueling further sell-offs and exacerbating the decline. This set off a period of intense scrutiny and a painful revaluation of Centene's stock, as analysts and investors alike tried to make sense of the situation. But what exactly triggered this crisis? What were the underlying factors that led Centene to abandon its financial forecast? Centene's troubles, at their core, boil down to two significant intertwined problems: fewer people enrolled in its plans, a decline in overall membership numbers, and those who remain within the system are demonstrably sicker, requiring more intensive care. During the height of the pandemic, a federal mandate prevented states from disenrolling individuals from Medicaid, leading to a surge in Centene's enrollment figures, a period of unprecedented growth. But that protection, that safety net, eventually came to an end. Now states are actively reviewing eligibility requirements, and consequently millions of individuals are being dropped from the rolls. For Centene, this translates directly into a shrinking customer base, a significant reduction in the number of insured individuals, and a corresponding decrease in government revenue, impacting their financial bottom line. But it's not solely about the raw numbers. There's a deeper, more concerning trend at play. It's about the specific demographics of those who are leaving the plans. Healthier individuals, particularly younger adults, are statistically more likely to lose their coverage during these eligibility reviews, while sicker, high-need patients, those with chronic conditions and complex medical histories, tend to remain enrolled. This dynamic leaves Centene with a disproportionately costlier and riskier group to insure, significantly impacting their financial projections. Imagine a buffet restaurant where only the hungriest, most voracious customers remain. The company's operational costs inevitably skyrocket, straining resources and impacting profitability. The old established financial models no longer accurately reflect the current reality. Medical costs per member are rising at an alarming rate, far exceeding previous projections. The remaining members, on average, utilize a significantly greater amount of healthcare services, requiring more frequent doctor visits, longer and more frequent hospital stays, and more complex, expensive treatments and procedures. This toxic mix of lower enrollment numbers coupled with escalating healthcare costs effectively squeezes profit margins from both sides of the equation, creating a challenging financial landscape. Centene's core business model depends heavily on accurately predicting and effectively managing these complex variables, but the sheer speed and magnitude of these changes have overwhelmed its existing models, rendering them increasingly unreliable. The company was ultimately forced to admit that it simply couldn't confidently predict how these rapidly evolving trends would ultimately play out in 2025, a clear indication of the uncertainty they faced. This fundamental shift in the perceived level of risk forced Centene to make the difficult decision to pull its previously issued forecast. The crisis, fueled by these converging factors, was now undeniably in full swing. Medicaid redetermination is the main driver of Centene's crisis. During the pandemic, states got extra federal funding but couldn't remove anyone from Medicaid. This created stability and growth for Centene. But in 2023, states had to start checking eligibility again, reviewing tens of millions of cases. Many people lost coverage, either because they no longer qualified or due to paperwork issues. Centene, as the largest Medicaid managed care provider, felt the impact more than anyone. The process created chaos. Healthy people dropped, sicker people stayed, and revenue became volatile. Centene's financial models, built for a larger membership, suddenly didn't fit the new reality. The redetermination process is ongoing, so uncertainty remains high. Until enrollment stabilizes, Centene can't make reliable forecasts. This is the heart of the company's current turmoil. The enrollment shakeup triggered a spike in Centene's medical costs. The key metric here is the medical loss ratio, or MLR, how much of each premium dollar goes to actual care. With sicker members, Centene's MLR shot up, squeezing profits. The company's old forecasts relied on a lower, stable MLR. Now, rising costs mean those targets are out of reach. Centene is paying out more in claims than expected, eroding earnings. This forced the company to pull its 2025 guidance and admit it couldn't hit its previous targets. Lower earnings and higher uncertainty can hurt Centene's credit rating and limit future investments. Management faces tough choices: cut costs, slow expansion, or find new ways to manage expenses. For investors, the old valuation models are broken. The company's value must be reassessed in light of this new, more challenging reality. The financial dominoes keep falling. The market is watching closely for Centene's next move. Centene's bad news sent shockwaves through the healthcare sector. Investors feared that other insurers, like Molina and Elevance, would face the same problems. Stocks across the managed care industry dropped as panic spread. But as the dust settled, differences emerged. Some competitors managed the crisis better, with less reliance on Medicaid or more conservative forecasts. The market began to distinguish between companies, punishing Centene most. The episode was a wake-up call. Government-sponsored healthcare is riskier than it seemed. The focus shifted from growth to risk management across the sector. After Centene's announcement, Wall Street analysts moved fast. Downgrades and price target cuts followed, signaling a loss of confidence. Analysts cited the lack of visibility into Centene's future earnings. With the 2025 forecast gone, they had to rebuild models with more conservative assumptions. Price targets were slashed, some by 20% or more. The higher medical loss ratio and Medicaid uncertainty were key reasons. Until Centene can show a clear path to stable earnings, analysts say the stock deserves a lower valuation. The consensus: Centene is now a show-me story. Investors are advised to wait for clarity before jumping in. The negative sentiment put even more pressure on the stock. For investors, Centene's crisis is a tough puzzle. The stock's sharp drop hurts, but what's next? Some see a buying opportunity, betting the market overreacted and the issues are temporary. Others fear the problems are long-term: higher costs, lower enrollment, and a broken business model. The decision comes down to risk tolerance and time horizon. Long-term believers in government healthcare might ride out the storm. Risk-averse investors may steer clear until the outlook improves. There's no easy answer. Uncertainty rules the day. Navigating this period requires careful assessment of risks and rewards. Centene's future hinges on a few key risks. The biggest: how high will medical costs go and for how long? Investors will watch quarterly reports for signs of stabilization. The Medicaid redetermination process must finish before enrollment numbers settle. Once the dust clears, Centene can rebuild its financial models. Management's response, cost cuts, new strategies, or business changes, will be critical. The story is a cautionary tale about the risks in healthcare. For investors, it's all about monitoring data, MLR, enrollment trends, and new guidance. The risks are high, but so are the potential rewards if Centene recovers. The next few quarters will determine if this is a temporary crisis or a lasting decline.